Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Devin Chopsy is with us right now answering our questions this week. Devin, thank you so much for staying with All About Stocks. We have Anirudh Shah, who's written in for our portfolio segment. Now, this is a segment where we look at your entire portfolio and tell you which stocks you should be holding on to and which you should be selling. Now, he tells us, Devin, that he's a long-term investor and he wants help in these with these four stocks. He has Reliance Industries. We just talked about Reliance Industries, which he bought at 775. He has 150 shares. Should he hold on to it?
Yeah, as I've explained, the Reliance Industries certainly remains long-term investment. I think it is safe. 250 rupees per share cash in the balance sheet is protecting its downside. At the same time, the larger amount of growth prospects happening in the area of the oil and gas exploration going forward, and with the additional capacity coming in the area of petrochemicals, probably I think this company would have larger amount of business to talk about.
Hold on to Reliance Industries. The next on his list is L&T, which he bought at 1410. It's come down a little bit from there at 1367, where it ended the week. What's your call on L&T? Is it for continue to hold for a long-term investor?
L&T remains, I think, a favorable choice actually, frankly, because if the infrastructure projects which are getting started after the intervention of Prime Minister, in my mind, I think the L&T would remain, I think, in forefront in getting newer orders as well. So, from a point of view of getting new orders, getting a larger visibility of next 3 to 5 years, and I think the company growing steadily in all its verticals, all of them suggest that L&T should be held into the portfolio. In fact, I think in the current market times, which is nervous market, one should keep on adding this stock in every fall. That would be, I think, a better strategy. Keep some kind of an SIP amount ready for us deploying every month. In every month fall, you could possibly add into this stock.
So we are holding RIL, adding on L&T. BEL, Devin, which he bought at 1,500 rupees. It's down to 1287 where it ended the week. Do you have a similar call on BEL right now?
Well, I would think that BEL, basically, I think one could probably wait for some better times to come. Don't have any specific recommendation to give on this particular stock, but I would think some better times or improvement in the market sentiments to happen, and then probably take a decisive call on it. Right now, it's not something which I could say that I think you can switch over to another stock. I would rather ask some investors to stay back and stay on hold for this stock for the time being.
But in the last on his list is Zydus Wellness, which he bought at 370. That stock is at 390 right now. It's a far smaller company. What's your recommendation on this stock?
This company has, I think, emerged as a very strong company on the product side, that is basically, I think, on the OTC counter side. So from that point of view, if you look at it, I think the growth could be quite sharp vis-a-vis many other companies. I would give some kind of an valuation to this company based on the FMCG segment. And that's where I believe that I think the growth could remain between 15 to 20% easily, or maybe slightly higher in some of those new product categories. So I would ask investors to stay invested in this company and allow this portfolio to grow on its own, I think, without touching it for the time being.
Alright, Anirudh, right now you have to hold on to all of the stocks in your portfolio. That's the advice Devin is giving you. Let's move on very quickly now to Devin's stock pick of the week. He recommends Tata Motors as a smart investment option for retail investors like you and me. Take a look.
Established in 1954, Tata Motors is today the largest truck maker in India. It is also the company that makes the world's cheapest car, the Nano. So you'd think that these segments would be the company's biggest revenue drivers. But that isn't the case. It is in fact the company's European vertical, JLR, that has pumped up its profits in the last quarter. JLR sales for the month of May were up a whopping 35% year-on-year, backed by strong performance in UK and China. However, the picture back home is not as encouraging. A sharp fall in the country's industrial growth is expected to hurt the company's truck segment. Also, fears of a poor monsoon can dampen profitability for the company's domestic operations. But the Tata Motors stock has recovered significantly from a low of 140 rupees in September last year, and 75% of market men have a buy call on the counter.
Alright, so that was Tata Motors, Devin's first recommendation this week. Devin, the main push for the last quarter numbers came in from the overseas business, from Jaguar Land Rover. And with the current uncertainty happening right now in Europe, do you think it might cause any concern for the stock or for people who buy the stock right now?
Well, according to me, JLR will continue to grow in the Tata Motors portfolio. I think they are contributing about 70% to the business. To my mind, I think that will continue. Yes, the situation is somewhat challenging in Europe, but I think America is basically compensating for the fall in the Europe, and China is continuing to provide steady volume. Also, along with that, other Asian markets are also giving them a good amount of opportunity to participate and make the growth numbers possible. I'm not too much perturbed or worried about margins either, because in initial phase when the company is launching newer products, they would certainly take a hit on promotional side and probably margins. But once they stabilize, the margins would come back again. To my mind, I think the investors who are basically buying this company, they are buying at less than 5 PE. So that is what is more interesting to me. One can buy and add into the portfolio and stay invested into this company.
I also want to talk to you about the domestic situation as far as the auto industry is concerned, and this is across all auto companies. There's speculation about a tax on diesel cars, there's high petrol prices, sales have been slowing down for both Tata Motors and for Maruti. Do you think the company's presence in the non-passenger vehicle segment will help it tide out this period?
I would not, I think, say that the things are looking pretty as of now. Maybe till the festive seasons are on, and this time Diwali being in the month of November, we are going to have delayed festive season. I don't think that in the first half of the financial year you would be seeing very smart improvement into the volumes of the car business particularly. But my confidence will only relatively higher onto the two-wheeler segment. The two-wheeler segment probably would drive the volume in this period. So maybe in the second quarter of the financial year we should be concentrating more on the two-wheeler like Bajaj Auto. And maybe I think in the second half of the next financial year, the current financial year, you should be buying into some of the car companies.
I'd also ask you about the valuations. They seem attractive now, but we have come up about 100 points from the lows we saw earlier this year. Do you think that then we should possibly stagger out this investment that you recommend over the next 6 months or so, or use an SIP format that way in case the stock corrects a little further, we'll still be able to take advantage?
Uncertain times in the market, I wouldn't recommend anybody to buy all at one time. Maybe I think suppose if any negative news comes on JLR front in the subsequent month and if the stock price comes down further for some reason, I think one could buy in a staggered manner. Maybe I think it is also important to buy a mix of regular share and a DVR share, so that at least your average cost comes down, and at the same time I think you have a larger amount of margin of safety there as well.
Alright, and finally could you give us your targets on Tata Motors?
We believe that this company should be, one should be holding on to this particular company for at least next 2 years. And if you are holding on to this company for next 2 years, we expect the stock price to double from current levels.
Alright, Tata Motors, Devin Choksi's recommendation for this week. Remember, he said buy a mix of the DVR and the direct stock, and of course stagger your investment over the next few months to take advantage of any possible cuts we might see in that stock. Hold it for 2 years, it will be able to give you a handsome return. After the break, Devin will answer a couple of stock queries that you sent in during the week. Remember, email ID is at the bottom of your screen. Stay tuned.